Gary Wagner here, just about 12:30 in Honolulu, 5:30 in New York. It is Wednesday, February 21st, 2018, and this is the Daily Report for Gold and Silver. Wild gyrations, huge price swings in the financial markets overall as minutes are released from last month's FOMC meeting, which was originally interpreted as extremely dovish, and then market sentiment changed to it being particularly hawkish. Gold, which was trading about $7 higher, closed $4.60 lower at $1326.60. Silver had been trading about 23 cents higher, closed up, but only up fractionally, up 4 cents at $16.48. And that was also evident as the dollar made a key reversal, initially trading lower on the day and then closing up 37 points, about 0.4% at 90.01. 500-point swing in the Dow closing under tremendous pressure today, and Bitcoin giving some profits back with the CBOE and the CME closing at 10,250 and 10,335. One of the better ways to describe today's extreme volatility and tremendous price swings in the dollar, gold, as well as U.S. equities is wow. Today, immediately following the release of last month's FOMC meeting, we saw the beginning of some wild gyrations in all three markets. Gold is currently trading off by about $5 and fixed at $1326.30. And that is after trading to a high of up approximately $7 on the day, the initial knee-jerk reaction once the minutes were released at 2 o'clock Eastern Standard Time. The best way to illustrate that is to look at an extremely short-term chart with a duration of 10 minutes per candlestick. Now, this is in Hawaiian Standard Time, so realize that 2 o'clock in New York corresponds to 9 o'clock in the morning here in Hawaii, and so this is the initial candlestick that formed immediately following the release of minutes from last month's meeting. We saw a tremendous spike to the upside in the first 10 minutes, taking it roughly to 1338 before tracking down just a little bit, and then 20 minutes after the release, we saw the market actually go back up and close near the highs of the day, and this would be up approximately $7. However, following that, you had a series of lower lows and lower highs as this market traded dramatically lower from these highs at 1338 down to these lows of 1324 and change. In time, the market stabilized and in essence traded roughly in this narrow and defined price range for the remainder of the trading session, resulting in our closing price trading off by $5 on the day. Now, this was all really led by dollar weakness and dollar strength, as that turned around very quickly also today. And so traders, when we look at the dollar index, we can see the initial reaction in the dollar as the minutes were released. The dollar had been trading at approximately 89.80, and from there traded down to about 89.55 in the first 10 minutes, and then by the conclusion of the first 20 minutes had traded to a low of 89.50. In the same way that gold then tracked lower, the dollar tracked higher. You can see it trading from 89.50 up above 90, and then, just as we saw in gold, somewhat of a stability of price action as it then traded in a narrow and defined range for the remainder of the trading session. U.S. dollar index closed up almost 0.4%, a gain of 32 points at 89.96, thereby returning to the most recent upward pop that we have witnessed in the dollar as exhibited by this daily chart, in which we can see a pretty dramatic rise from this critical support level at 88.58 to current pricing at 89.96, just 4 ticks below 90 on the dollar index. And traders, although we're seeing a similar pattern in silver in which the market initially popped higher following the release of those minutes, I believe trading up around 23 cents on the day, going to a high of 16.72. It, like gold, sold off as the dollar gained strength and then stabilized through the remainder of the trading period. The key difference between gold and silver is silver actually closed fractionally higher, but not in a negative, up a little bit over 1 cent on the day. And you can, of course, see the day's action as it's represented on this daily candlestick as having a tremendous price range from the high to the low and a very narrow and defined range from the open to the close, thereby giving it the net result of closing up approximately 1 cent on the day. Of course, we did pull profits in our long gold position the other day, and my recommendation is to maintain our neutral stance with no active trades in either gold or silver as we await some further potential selling in the market, and then we will look to re-enter from the long side. And traders, lastly, I do want to take a look at Bitcoin futures, this being the CBOE single Bitcoin contract. We noted that the other day we had a continuation of the dramatic rise that we've witnessed ever since Bitcoin traded to these lows at approximately $6,000 per coin. The dramatic rise up to a little bit over 11,462. We also noted the fact that that particular price point is very, very close to a 38% retracement. And this retracement represents a data set from the absolute highest point Bitcoin has ever traded to the lows seen when the market reached 6,000 back at the beginning of February. The market tracked just a little bit above that price point, but at least for now, it does appear that that is going to act as a resistance area. So we are currently pegging resistance in Bitcoin at around 11,500 and support at approximately 9,200 on Bitcoin futures. Traders, the major gyrations and price swings witnessed in the market was that typical knee-jerk reaction. However, today it was much more pronounced as it took much more time to unfold. At first, the minutes were interpreted as extremely dovish, but statements came out by a couple of analysts stating that they felt it was more hawkish than dovish, and that really shifted market perception and market sentiment, moving markets that were positive to negative and markets that were negative to positive. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.